Good morning and welcome back. I'm Grady on the charts. Today is Wednesday morning, April 23rd. We're about to get live in this micro NASDAQ, the MNQ. Hope you guys had a great night. Hope you guys had a great morning. Hope you get well rested and ready to trade. Welcome back. Perfect. Hope you guys are well rested and ready to go. Um, let's see if we can do a little bit better today. Yesterday, I had a crazy day. I traded up and down the market. I did a little bit of more, a little more trading after the live stream, and I did a lot of struggling. I did a little bit of over trading, and it turned out that it was probably better if I had stayed off the chart. I mean, I did pick up um, on a few things that I was missing, but yeah, it was a narrow escape yesterday. So today we're going to be returning to our basics. We're going to return to our strategy. We're going to be patient, and we're just going to see what the market is providing for us. Okay, so in the news, what do we have? Today's Wednesday, so we have okay, HCOB manufacturing PMI for Denmark. Okay. S&P and the S&P manufacturing and the services PMI for Great Britain. And then tomorrow in the US markets we'll have durable goods, and then we'll also have existing home sales coming in tomorrow. All right, so let's pop over here to the charts. Let's see what we've got. All right, so the market's going to be open in about 2 minutes. Okay, so let's um let's see where we are. In the overall daily chart, I've noticed that we've returned to this large imbalance that we had set out a while ago. That was this imbalance that we had between this low and this, between the opening price of this candle and the opening price of this candle. And I just noticed that we traded right into that imbalance last night over the close, after the close. And we had some earnings come out. I know Tesla came out yesterday, so their earnings gave them a little bit of a bounce. So we're up in that regard this morning. I haven't had a chance to take a look over at the equities, but that's where we left off yesterday, quarter low. So in this imbalance here, we were just peaking just above 50% of the range on this daily chart. We'll drop down to the 4-hour chart. Here we are again. We've had a huge gap up after the close. We had earnings, so we opened much higher. I'm not sure if I should anticipate or expect a retracement back into this range, or whether we should see prices push a little bit higher. Sometimes we just have pops on news, and if we have a nice little pop on news, we're still would need to remain um, aware of these imbalances that we have here that have kind of set themselves up as possible inversion gaps or just levels that would send price lower from these points. You can pull that forward. And so in most of the ranges that we've had set out here, we've already penetrated consequent encroachment or the mean threshold of those levels, even on this 4-hour candle. So we have 30 minutes left and the market is open now. Fed Waller is going to have a speech in about 5 minutes, and then we'll be able to we'll see what happens with that. So let's go ahead and drop down to a lower time frame. We're going to drop down to the hourly time frame and see how price is progressing. Okay, so we have London session here. Looks like maybe this is the high and the low of Asia. There's an imbalance here. Um, so this hourly candle closed just recently. Then the next one opened. Then we drop down into the body of this down closed candle. We pop right back up. Now we need to see on the lower time frame what that actually looks like, or so what it actually represents. Okay, so we've had a bit of a gap up here. Okay, so here is the London session high. We moved up above London, traded back into this down close, put a wick into the wick of this candle, moved up, created an imbalance here. This is that higher time frame level from before. We'll just pull this aside so we just keep it in mind as to where we are in the range. Then I'm going to go ahead and mark this level out from here to here. Pull that forward. That's the 15-minute chart. I just wanted to see where we are in a lower time frame. I think we could go ahead and leave this as a 15, and then we'll pop out here. We'll come over here and we'll take a look at the lower time frame. Okay, so immediately off the open, what do we see here? We see that before the market open, we dropped down into this imbalance, right? This is something that we saw yesterday that we ignored, but we're not going to ignore it today. We ran immediately the consequent encroachment of that gap, and then we moved up higher. We are, in my opinion, extended, meaning that, we had a lot of velocity on the close yesterday. We were already moving up. Then we gapped up on the news. Now today, the news is hitting the market, and we're seeing how it's reacting. Okay, so on the 5-minute chart, just prior to the open, we dropped down and we hit consequent encroachment of this gap, popped up. The body of this down close candle closes on the opening price of this down close candle. We open off of that level. Then we put a wick into the body of this candle, and then we moved up just after the open. This is our 1-minute chart. This is our 5-second chart. I've moved a few things around. I moved just a couple. So it's not what I need. I need to go to the 1-minute chart here. And then I'm going to pop over to the regular trading hours for this candle because, again, I am looking for the first presentation fair value gap to see where it forms and to see how we operate from that level, how we perform from that level, moving away from that first presentation fair value gap. Now, what I see here is that we have these overlapping wicks, okay? And sometimes wicks are gaps. If you trade long enough, you'll hear yourself saying something that you said before, which is the strangest and oddest experience that you could have, but it's just experience. And the reason that I was saying that is because the idea of the immediate rebalance, dropping down into these levels and then taking us higher was just, just came to mind immediately when I saw that. Like, oh, yo, I think I saw this last week where the market opened and then we had these two overlapping wicks along the body of a candle. We traded down into it just a little bit, and then from that point we rallied. On the lower time frame, there is some sort of a excuse me, I'm having this sort of a need to clear my throat on a regular basis now. It's something, just something in the air. Maybe it's the air change. It is a rainy day here in Katy, and so I am yeah, I am dealing with that. Just the humidity and the moisture in the air. If you know anything about this region, yeah, it's feast or famine, drought. Okay. Hey. Hmm. Imbalance. We dropped in. We did not close below this down close candle. That's just the lower time frame, analysis of this 1-minute candle. There's not really That wasn't really much else to see. Whether or not we ran to a significant PD array at this high is going to be extremely important. Excuse me. I'm just trying to track it down as quickly as I probably could. We just dropped right back into these wicks. This area here where we tap this red line, the consequent encroachment of sort of this range. I'm watching that out of the corner of my eye as I try to track down the higher time frame PD array that we sourced. In the hourly chart, it does not seem clear. We did run into the low end of 3 consecutive up close candles from the opening range of Sunday, Monday morning, the run up that concluded Asia session and the London session. Okay, so now we drop back in. Just watching this out of the corner of my eye. This rundown. is here. This is what we're looking at right here. As we can see, does it seems like we've just ran up, turned over, popped right up into this gap, and then moved down from here. And what if we'll revisit this gap, or will that serve as a balanced price range and sort of be mitigated as a breakaway, meaning that we would just trade very low into the range, maybe to about here, quarter of the range, level in, and then move to the downside. Okay. Hmm. I believe this is on the 15-minute chart. Okay, that's 2 hour. It is on the 15-minute chart. That's the consequent encroachment of the gap on the 15-minute chart. Mm-hmm. Price seems to be kind of quick here. Interesting. Very interesting that we hit the consequent encroachment of a 15-minute gap and we popped up like that. Okay. Okay. Um, hmm. Okay. Hmm. Not gonna lie. Not gonna lie. I didn't that was a little bit odd to me. That was a little odd to me because the reason I looked to my left is I was looking for news. That was the first thing I wanted to see. Wanted to see how the news event. How did I miss this news event? That was weird. Okay. Okay, so on the 5-minute candle, we have this expansion to the upside, and then the candle just turns right over. That's 100 points. This entire candle was 200 points from the bottom to the top, which means what? That means that it seems that price may be moving a little bit faster today. And it also seems that we may or may not be dealing with, mm, well, I'm still trading micros, which is very, very good. So, which means that I've already reduced my risk for those types of movements. And because price did pop like that, it was extremely startling. Now, this red line that we were looking at just a moment ago, which is exactly where we seem to be again, that we blew right through. We returned to it. We put a down close candle on it. Now we're touching it. Now we're popping away from it, right? Okay. Okay. Whoa. What does that mean? What are we dealing with, yo? I said yo. I might as well say bruh. What are we dealing with here, bruh? This is very interesting. This is very interesting. Because it was really startling because the pre-market price action was very steady. As soon as the market opened, we dropped into this 15-minute imbalance here. Bam. We touched that. We moved up aggressively, turned over. Now we turned over into these down close candles. Now it seems that we're using the body of this down close candle to move up. Okay. I was expecting this to be the, what do you call this thing that I said? The first presentation fair value gap. If it were, then we've inverted it, or it's been used as inversion. And now I am curiously considering what I'm looking at. I think that's the best way I could say it. That I'm curiously considering what I'm looking at. Um, and I'm looking at it with a lot of mistrust as far as where I think price could go from here. Just this pop here, and then we moved over and we turned here. What am I looking at, or what am I thinking? Well, the issue is this is a down close gap here. This is an up close gap run to take out the prior high. So whatever the prior high in this range would be, or whatever. So we established this new high. Then we broke down with these two down close candles. So you're probably saying, well, Grady, you're in a lower time frame. That's not going to give you much. The only other thing that I see on this time frame is this, and this is my second concern. If I can make this happen as quickly as possible from here to this high, and then I'll swap this over to optimal trade, and then I'll go in and then I'll reverse it. This is the only other thing that I'm concerned about, right? Is running 62%, 70% from this wicks close, from this body's close to the wicks high, right? Off of this run up means that I'm in a situation where I could see price run up this body of this wick. We hit 50% of the wick roughly, and then we could turn over and then begin our descent from this point, right? So, of course, again, like I say normally, I want to be a part of the longer move of the day, not a part of the shorter move of the day, right? However, I need to make up my mind fairly soon about where I see price going and where I think that we could see price going before price gets going. Um, my how to put that? My target, right? That's the best my best possible position to be in would be the first 35% of the overall move. To me, my personal experience, uh, when it's going to any particular, is going to move most of its range early in the move. The last of the move is, price is meandering back and back and forth before it gets to wherever it's going. But as soon as it leaves that initial entry area, right? That the best entry area. When it leaves that point, it's going to leave that point with velocity. And it's going to touch, it's going to test, it's going to retest, it's going to break, and it's going to move. And it's going to retest, and then it's going to go. And then everything after that, unless it's a trending day, is just this sort of a 50% retracement, and then a 30% retracement, then a 50% retracement, then a 30% retracement as it moves. We are having this area where we're moving up higher in this wick, and every time we move to these levels, we're pulling back, and that's my issue. So we hit the 62%, we pull down below 50. We opened here, right? Then we 70, 79. I mean, yeah, 79, 70, 62, 50. 50 drops all the way down below 25. We retraced all the way back into this area. Mm, mm, ran to 70, got away from it quickly. Hit 50. I'm sorry, ran to 62, got away from it quickly. Hit 52. La 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 la. Yeah, this is weird. This is weird. This is not that steady price action that I think we saw yesterday. But maybe I should stop looking at the 5-second chart and just look at the 1 minute chart. I'm gonna look at the 1 minute chart and it's 9:15 a.m. So the first 15-minute candle has just expired. And I'm gonna pull this here and we'll take a quick look at that 15-minute chart. But don't let me forget about, please don't let me forget about that first presentation fair value gap. All right, please don't let me forget about it. This imbalance that as we drop down here, we moved above it, we traded in, and then we like piano keys, 1, 2, 3, as we moved away from it. I think maybe if I just go ahead and simplify this, that would be something that I still also would want to keep in mind. I can't really confirm or deny it at this point. I can't confirm or deny it at this point. I am looking at the bodies and the close of these candles. We're dropping down, we're touching the bodies, we're closing. This is the 1 minute chart. We're closing here on that opening price. Open, wicks in, move up. So price is building, price is building. And you know what it looks like though? It looks like FOMC or non-farm payroll, right? How sometimes the price will do this, boom, and then all of a sudden this becomes like a bullish order block, right? It will have that flash to the upside, and then everybody will think, whoa, and then we'll run up, run up, run up, run up. So now that we've reached this 70% range, now I'm really kind of interested in this here. I don't know what that means. I need to turn that off. Okay, here we are. Here we are. Here, there. Now we'll hear the wicks of this down closed candle. We turned over and dropped into it. And again, the way that it's moving up to the upside, should I trust that, right? Should I trust it as a bullish move? I don't want to. I do not want to. Something about it says, hey, just watch the way that we operate on the wick of this 5 minute candle. Just watch the way we operate this wick. All right. So even if it goes, or if it goes without me, I'm fine with that. But I just need to watch the way that we're operating this wick, that we're traversing it, right? Let me lock that in properly. Now we're at the 70% range. Boom, boom. Right? So this is the area where I would see price want to just fly, right? Fly to the upside if this were an inversion of that range and that gap. Um, 1, 2. I don't know. Have I ever seen a fair value gap like this? 1, 2. I guess they're all like that, right? The body's closed here in the 1 minute. The wicks are here. Okay. So I'm okay, right? I'm okay with what letting this move go without me, and I think that that's the best mindset to have right now. Grady, this is gonna be one that's gonna be for the record books. It's gonna go, yeah, 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 yeah. They're all. This entire month of April has been record book April. I'm not quite sure how you would, quantify the amount of ridiculous instability and volatility in price. There we go. Let's see it go then. I'm waiting. It's 9:49. We're going to start the macro in 30 seconds. So there's that. Hmm. You remember when I said 2 seconds ago, hey, words, 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 immediate rebalance, right? You know what's weird? You know what's weird? You see this, you see if you take these three candles out here and you have this one pass up and then it's kind of this little pass down here. This candle, had it been right here, would have been that idea that I had of immediate rebalance. Instead of it stopping here the first time, it stopped here the second time, and then it moved to the upside. Mm. This is what I was looking for, to run up past 70 and then turn over and come back, right? So we just began to build up this wick. And my concern is that we were not going to take the high of the wick. My concern is that we were going to do something similar to this. Get very close to the high of the wick, and then at this point begin to um have a bit of a retracement. So I guess that's the best way that I would describe watching for, because 87% level, and of course that has my full attention. I'm right into 87% of the total range of that wick, and then we begin to have resistance. That's basically what that would be, resistance at this level. And I think for me personally, I like to have a narrative that price is this is calculating, you know, the necessity to trade above these levels. That's why we'll have resistance because the calculation starts to get really in depth. The calculation is always running, but when we get to these levels, it's like, okay, well, do we need to go past this? There's 3 minutes and 20 seconds left in this candle. The macro has begun. We're 1 minute into the macro. Mm. Mm-hmm. 1 minute into the macro. On the daily chart, I was just wondering about how the body of today's candle is full, meaning from the very opening of today's price action, there is a minimal tail on the day. It's just a full candle, hardly any wick at all. What's this, Grady? Oh, I don't know. I don't know. This is one of those things that is kind of just we were talking about. This is kind of what we're talking about. What is this? This is what I was talking about. Like, wait a minute. What is this? Man, all the way up this level. Once we got to this point, there's this level. We drop right back in all the way to 25%. Look, my bruv. Look, bruv. I can't tell you what I'm looking at or why sometimes I see these things. All I can tell you is that we're in the macro. We just took the prior high. All right, we're above London's high. We took the prior high. We put in a new high, and then as soon as we got here on the 1 minute chart, we dropped down and we closed below the prior down close candle. Then we popped up to 62%. It's howdy doody time. That's all I know. That's all I know is howdy doody time. And because of the way that price is flexing like this, it's made a little bit more um cautious. It's made me just a little bit more cautious with the way price is flexing. Where are we in the hour? Okay, we're in the last 7 minutes of the hour is where we are. Literally last 6 minutes and 20 seconds of the hour. Then price pops up here, turns over, and then drops right down at the end of this, near the end of this 15-minute candle. But remember, just like any 5 minute candle, a 15-minute candle has some of the same features. What does that mean? That means that this candle could be bearish its entire lifespan and then go bullish in the last minute. Or a 5 minute candle could be bearish its entire lifespan and then the last 10 seconds it pushes bullish, right? So here we are, 37, 36 seconds left in the 5 minute candle to 9:55. Okay, so we just rolled up above some of these highs here on the 5 second chart, on the 1 minute chart. We just ran to the low of that prior up close candle and we've kind of tanked just a little bit. What am I looking for? I'm looking for a certain level of confirmation between this 25% level and then that 70% level. Because we hit 25% and then immediately hit 70, I, I, I'm giving this next 5 minute candle one chance. That was it. It's going to the downside. No, it's just, hold on a second, 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 hold on a second. This normally, if I see us hit 25 and then immediately touch 70, the next round of candles are just straight in the opposite direction. And so I'm looking for any movement back to the upside. And I'm willing to take this short and even take the loss because of that sort of a conviction. We're down below 25%, and I'm looking for any movement to the upside here on this 5 minute candle. Please give me an entry. We probably will not revisit 50% at this point because we tapped that 70% level. It's not really a true gap, but because I don't even see it on the lower time frame as an imbalance. It was just this long wick, and we traded up into that long wick as high as we could. Come on, go up, go up, 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 up. Give me an entry. Give me an entry. with the length of the ranges that we've moved, I don't want to get I don't want to get stuck in here. This candle did not close below this candle either. I mean, it seems like because I'm on the even on the this is a lower time frame. So even on the 1 minute, I'm still looking for market structure shift to really be truly confirmed. Know that we're closing below these down close candles, but we have this imbalance. We have these gaps and imbalances, and we are coming back into those or retrading to those levels. So we could reprice here and we could do anything. And I'm just looking for clear signals for market structure shift before I would say, oh yeah, I'm bullish and bearish. Although this signal is one that, sometimes I could take, but it also has to be in confluence with the overall story, right? Can't take it by itself. If the other part isn't fitting, then I'm not looking at it properly. I do see that we're right here at this boink, 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 which is this 15-minute close. So I'm watching the 15-minute close. We've traded the entire range of the 15-minute wick or the 5-minute wick that was here. We took out that high and then we came all the way back into the close of the prior up close candle. So does that mean that this 15-minute candle will not close before that below the prior close, right? Which means that this minute candle's close hasn't been violated, which means that it's still in effect as possibly a candidate to be a bear short block. Yes, I still struggle with that. You see here, we returned right to the closing price of that prior up close candle. We're above it. All of my thoughts are, well, hey, if we're above it, why don't we go ahead and nope. 2 minutes left in the hour, minute and 20 seconds rather. And so what's my concern about this hourly open? My concern about the hourly open is that we have these two candles here, okay? And there's this candle and this candle is higher. And the thing that it's really bringing to mind is a swing high, where you have a high candle with two lower candles either side of it, which is normally found at the end of a bullish run. That there's going to be this swing high or a consolidatory range of candles that will represent a swing high. Okay, boom. Okay, now 49 seconds left in the hour. Let's switch this over to the hourly chart very quickly. I just want to mark out where that hour closes. Do I expect to see some rapid movement away to or away from this point? I don't have any expectations for the market right now. The way that it's performing, it's it's Wednesday, right? So either Tuesday or Wednesday is going to be the low or the high of the week, right? So we may or may not expect some consolidation near the lows or the highs as all of the calculations are performed to conclude that midpoint or that high, right? So we could have the high today or the high tomorrow. Heck, we could have the high Friday, right? And then we could have a massive free fall on Friday. So hour has just opened. Oh, whoa. It gave us just a bit of a look. The new hour is giving us what wait, whoa. It's flashing on us. Which means that it's taking out every high, it's taking out all of the highs and all of the lows. So all of the stops that are above and below this current range is just taking them just that quickly. If you put your stop loss at the low of the down at the low of that down here, right? If you put your stop loss here, it just took you. If you put your stop loss here, it's just taking you. hmm Now that we've done that, we have this range, high to low. Crazy. Whoa, I thought we were gonna have fun yesterday. This, this is, a, oh, whoa. Mm. Hi, guys. Today's stream is sponsored by Financial Manipulation and Anxiety. When there's fear in the water, something, something, something. I try to remember the Warren Buffett segment, right? When everybody's fearful, you should be something else, right? You should be greedy when everybody else is fearful. Somebody should be greedy because I'm scared out of my wits right now. It's not it's terrifying. New hour open. We ran. We just touched the hourly high. We dipped down into the body of the previous up close candles. We've been moving up all night long. Should we continue? Should we have pullback? Higher time frame pullback. Mm-hmm. This is what I decided to do. I decided just to get involved with the market. The ranges are much wider than I haven't had anticipated. As soon as I took the entry, then I realized that this range is 27 points. All right, that range is 27 points. I put my stop loss right above wrong 15-minute close. That was the wrong 15-minute close. I'm looking at this line, forgetting that the hourly close and the 15-minute candle close are the same level. Okay, guy, this is not the type of stuff that we want to get involved with today. Hmm. Waiting time, 10:03. Just wait it out. If they hold price for 2 hours, then at some point it has to begin to deliver in some particular direction or another, right? Right? Or they could, or they could just freeze the market in a sideways level until tomorrow. Just let it consolidate sideways in a range because of an extended uh, um, 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 post-market and pre-market action. Then, of course, the New York session would just have to, you know, would have to just be in this holding pattern to really begin to calculate what we have going on here. Now, you see how this wick just touched the underside of the subclose candle? Okay, I like that. I really like that. I'm just going to kind of grade this 1 minute candle and see if it's showing us any respect in life. Now we're at the low of the prior up close candle. Now, the only reason that we're grading is not for entry purposes. It's for identification. What are we doing right now? Where are we doing it? What and where? So I'll move to this, excuse me, I'll move to this down close candle and we'll see. Okay, on the lower time frame, we just cruised right along the mean threshold of this down close candle, and then we moved away. We did not violate the closing price of this up close candle, so we're in a very narrow, very delicate consolidation where we move from the down close candle to an up close candle. However, we're still respecting the mean threshold of this particular candle, not this one. We're just respecting the high on this candle. There's a small imbalance here between the wick of this up close candle and this one. There's here. That is right here. And now we've returned to the body, to the to the opening price of this down close candle. So we respected this one. We moved up above it, traded down, touched the mean threshold, moved above this candle, traded back in. There's an imbalance here in this down close candle. I want to move this box here to here and to there to here to there. Now that is the mean threshold of this down close candle. We've just touched it and we popped up. So we're identifying a few things, right? But remember, we're on the lowest of all of the time frames. So we have to zoom out because of course, price is going to respect levels even on these time frames because a microscopic movement from very narrow range of liquidity has all of the signatures of the overall market structure, except it doesn't have the distance. It doesn't have the range of delivery when it finally delivers. So we're continuing to watch the macro and the micro. Macro is not this is not macro, but I'm not sure what the range would be. I guess we were watching the micro and the nano, right? So because I think anything like under an hour is intraday, so it's not a long time frame. So there we go. It's not a long time frame. So we're just watching as price move between these levels, right? So what am I looking at here? Right. So if I looked at this candle and I treated it as a data candle, right? So sometimes we'll run from data lows to data highs. That's one thing. We'll take that into consideration. But sometimes when we have news candles, it's just better just to go right back to the price action as if that candle isn't there, as if its lows aren't there or its highs aren't there, and just look at what price action was doing before this weird sort of a thing. And that's why we could say, oh yeah, mean threshold of this candle, and then we move up. Oh, now we violated the gap here on this down close candle. You see, we had a sort of an imbalance right inside of that candle here. We've gone below it and retraced up to the underside of its mean threshold. Okay, so does it mean anything to us? No, it just means that we're closing below its mean threshold on this down close candle. We close below the mean threshold of this down close candle. Is that a market structure shift? No, it's just probably just a low push. Why? Because we also have on the lower time frame this down close candle that we just traded into its wicks. See? So it's just one of those things where you have to have like real closures in order to just frame that idea. Now, 5 minute candle is a beautiful thing because we have wicks up and down that'll make you sing. I don't know why I'm rhyming words right now. And I think it's just one of those deals where I am throwing sort of price action back and forth in my mind and I'm watching it. I haven't determined a higher price target. If there's a higher price target, it would be good to have one. And with the back and forth price action, I'm really kind of sitting on my hands. It's 10 a.m. Excuse me. And at 10 a.m., I would be looking for normally what? I would be looking for a fair value gap for price to trade to. What did they give me? They gave me the small gap in price right here, right? And then I would have to ask myself, is this the fair value gap? Is this a fair value gap? Right? But this is where we are at 10 a.m., right? This price just runs to this level. We close here on the lower time frame. We touch the consequent encroachment. We turn over right at the I'm sorry, this is in the wrong place again. Okay, guys, we need to get it together here. And so you're saying, well, what about this? Is this not the fair value gap? I mean, I'm still looking for it on a higher time frame than the lower time, literally a higher time frame than the lower time frame. That's where I'm looking for it. Green giant. 25 seconds left in the 1 minute candle. We've not closed above the consequent encroachment of this imbalance yet. New 5 minute candle has just opened, and the only thing we have in this range are wicks. We could see a push through here. And if I were extremely confident about the push through, I would have taken the long. And because I'm not, and I haven't seen it in my analysis, then I haven't. No, this is the only thing that I'm really watching to see whether or not we have this really true type of follow through on price action. I don't know who I heard say this, but they were saying that when the market is extremely obvious is the days that you should really be trading. When it's obvious to you, when it's not, when there are no, when there's no real, um, when you're not taking notes, right? Days that you're not, I'm all, yeah, of course, you're always taking notes because you're saying, oh yeah, this is a type of day, and it acted like this instead of that, right? But a day like today, where for some of you guys, you say, oh yeah, it's obvious. That's great. That's great. Good for you, right? Good for you. For me, I don't like it. I don't like the level of this wick. I don't like how this wick is here. I don't like these long wicks to the downside. I could follow the bodies, but wait a minute. The body of this candle is inside of this, but the wick, this all everything in front of this candle is inside of it. This candle and this candle. Wait, okay. This candle, and this candle fall inside of the wick of this down closed candle. Right? That's some weird, weird stuff to me. I don't like it. I don't like it. If I liked it, I would be putting more money on it. But even with this particular level, right? The ranges at the same time were for me surprising. And again, I'm not trying to be surprised. I don't want to be surprised. I want to say, yep, that's the setup. Oh, yep, there's the high and the lower high, or there's the low and the lower low. Ba 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 da da bam. Jimmy jing jing a ling ling. Jimmy ding bing a ding bing. What I love about trading, and I hope you guys love this too, is that you are a better trader at the end of the day than you are. You're a better trader at the end of the day than you are at the beginning. At the end of the day, uh, at the end of the day, look, I could tell you at the end of the day, I could tell you who's gonna win the Super Bowl in 2030. Um, at the end of the day, at the end of a day of trading, I can tell you, hey, look, the lottery numbers in 2081 are gonna come out on a Wednesday morning. At the end of the day, not now, not no, don't ask me now. At the very close of the day, after I look back over the entire market, I can tell you everything. Much better trade at the end of the day than I am at the beginning. Boom, 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 boom. Nice little pullback here. This seems more stable as we drop down and we touch the body of this candle. Boom. Pop up. Pop up into what? This small, tiny imbalance that we saw at 10 a.m. Are you playing with me right now? No, not playing with you. It's just that, that was the candle we traded to at 10 a.m. Some people call that the silver bullet. When I came back through it the second time and I repriced to it, I was 4 down from that point. What are we going to do now? Turn right over, right back up. And then it's not the end of the day, so I can't tell you. It's not the end of the day, so I can't tell you. Sorry. 2 seconds left in the 5 minute candle. New 5 minute candle opens just a little bit higher. Trade up just a little bit. Tempted. Tempted. Why? Because the wicks get this fell away. You see how the wick of this candle just disappeared? So in the back of the price action, the wicks were extended and long and wild. And then as soon as price started to do something that's recognizable, the wicks just became normal length. Now let's see if this holds. Not out of the woods until you see the field, friends. When you see the pasture, then you're out of the woods. But if you don't see the pasture, you're not out of the woods yet. You're just looking at trees, right? Because right now I feel like I see trees. I see tree. Get it? ICT. I see trees. You're not out of the woods yet until you see the field. Never mind. Never mind. Only ICT lovers and haters get the joke. I see trees. Okay, here we go. So I like this displacement to the downside. I kind of like that. It seems as if whatever this consolidation range is, that we've been let go, at least temporarily. It's still early in this 5 minute candle, but that's not a problem because this candle opens here. We placed a little touch directly into this gap that we said, oh, wow, that looks like it was the 10 o'clock gap or whatever. But we went above it, below it, above it, below it, above it, out of it, then back to it. This level here, even as on the lower time frame, looks like the market structure shift to me. You see, it's harder though to rely on it because of the low time frame. However, after all of this consolidation, we broke to the upside, broke to the downside. We've traced to this whatever. Why is this here? Because this is the down close candle. This level is the mean threshold of that candle. We touched it, then we moved below it, then we touched the low of this up close candle, and then we've moved from that point. Mm. The issue is that on that low time frame, there are many opportunities to get involved, right? On the lower time frame. On the higher time frame, which I mean the minute, we're already to this point before recognizing that we still haven't broken below this level. We still have not closed below here. Good, we just did. So we violated this down close candle. We've closed below it. My goal at this point is to fade a retracement. Anytime we move up, fade it to the downside. My issue is that we still have not closed below consequent encroachment of this gap. But the issue is because of the way the structure is set up, by the time we close below this gap, we are probably on our way, meaning an extended move to the downside. On the 15-minute chart, oh look guys, look what we just did. There's this down close candle that we could be retrading to, just as a bullish order block. We just consolidated, sat, wiggled, created a small gap. This candle's tail goes right below this top prior one. This is the third one that's going below this one. If there were a fourth one, it could be here, which would be higher, and then we could move up from that point. So I don't see I'm trying to be a part of the sustained move, right? Not a part of the short-term pullback or the consolidation that's going to chop me up and have me exhausted saying to myself, why? By the time the market really gets going at lunchtime, at noon, right? At 11, then the market really starts saying, oh, yeah, it's time to go. But, but, now we have this candle that is turned over and we've popped right back up, right? So this is what we were saying. We're saying we were looking for this candle to come down. We were looking to close below these levels. We did close below most of these levels. We did turn over. We did move back up, and there's a small, tiny gap right here in price. We're right in it. And I'm just marking it out, and I haven't gotten involved. I haven't taken the entry. We moved down below this prior up close candle. We moved to the low of the prior up close candle, which is a different thing. Let's watch in this 1 minute candle, see what it offers us. Inside of this candle, what do we have? What do we have in this candle? What's in here? Let's take a quick little look. Can we run the high? All right, is there a gap above this level that we could get to? Or have we traded it already? There's something in this range, like up here in the wick of this candle, like 50% of this wick. What do you think? 50% of that wick? What do you think? What do you think? It's weird, Grady. What do you mean 50% of that wick? Man, look. 50% of this wick. What do you think? I'm just leaving the options on the table. Leaving the options on the table. So we turned here, and then inside of this up close candle was this gap. We traded into that gap, and then we moved lower. That's very fine. That's very fine. It's very interesting. Very good, fine, and interesting. There's a small imbalance above this high right here inside of the upper end of this candle. 18 seconds left in the 1 minute chart. And I still would like to see us close below the prior down close candle before any type of movement back to the upside. Not saying that we're even going to get it. I mean, but it just would be normal to see price just turn over and then move back up into a candle or take its high or run to some level above it, check in with it, and then move to the downside. Let's see what we get. We got a very awkward closing situation where it is very unclear as to whether or not we close below the prior down close candle. We turned over and we moved into this range. This is that gap that we said, oh man, it could come back to. This is on the 5 second chart inside of the high of this 1 minute chart. This would be like an area where I would take a short and then put my stop above the down close candle. Okay. Now we challenge the high of that candle. Still considering whether, still waiting to see whether or not we're given this, right? Are you going to give us that? Are we going to run it all the way back up there just to shake out, you know, like on this 5 minute chart, right? On the 5 minute chart, where is the movement back into the bodies of the up close candles if we're bearish, right? It should be there. So I'm looking for that. I wouldn't really expect to see just price just collapse right now. Not without at least a wick to the low of this up close candle. Minimum. At least to 19,038.25. 19,038.25. I'm looking for it. Looking for it. Looking for it. What is that? That's a run to the close of that up close candle. The opening of the prior up close candle. We just ran all the way up here and touched it. Whoa, buddy. Whoa, buddy. Whoa, buddy. Yep. Yep, Bermudo. That's some wild stuff. That's wild. So here is the 50% level of that wick of that up close candle. I would feel insane shorting that. I really would feel crazy. You see how we came up here and we just touched that real level? That would be crazy. But it was a thought, right? It was a thought. We already have that as a concept of how price might operate. 14 seconds left in this 5 minute candle. Let's see in the last 10 seconds, does it get crazy? Or will we start to see price begin to slide to the downside in the last 3, 2, 1? New candle open. We did not close above this close candle. Crude oil prices just came out as medium news just now. Oh no, it's coming out in 5 minutes. Okay, 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 okay. So here we are. This is an interesting day. Interesting day. Okay, so I told myself, look, the wicks are gone. The wicks are gone. On the 15-minute chart, we still have the wicks. The wicks are still on the 15-minute chart, and I do not like trading days with wicks everywhere. Wicks everywhere. Wicks and tails. That's good move. That's a good move. Good move. Good move. Good move. Good move. Good move. Excellent. What did I not see in the whole range? The push to the upside, move consolidation above the gap. We violated basically most of all of this. I'm looking now for an area used as what about excuse me. Now I'm looking to say, okay, well, what did we use as the order block then? Boom. And this is the area that made me feel like price was going to move back up, remember? Because it was indecipherable. It wasn't obvious. It wasn't completely clear. And I guess in the future we could say that this might very well be obvious. But the only thing we came to do is run down to the closing price of this candle. We just put a wick, then reject it, popped right back up, came in very close to this candle, and then moved away. I closed my eyes to it to a certain degree with this manipulation to the downside, right? To a certain degree, I closed my eyes to it as we begin to move this way. So I'm looking for what at that point, right? I was looking for confirmation of the move, and I did not make an entry or anything until I got confirmation that it was going to continue, or it was the direction I was looking for. It didn't give it to me. It just turned right over on its belly and ran back the other way. And ran back the other way. Okay. We're going to continue. So what we'll need to do is we need to continue, not reset, but continue our analysis. So that means that we're back to where we were a moment ago, right here on the highs of the 5 minute candles. In an hour or two, if you were to look at this chart in an hour or two right from now, then you would say, oh, all you needed to do was get short in in the upper wicks, right? And I always think that that's funny because I'll do that oftentimes. Oh, I've even done this. I've even done this. Where is it? This is something I did one time. It's very fun to do. Very funny, very fun and funny and fun to do. I did this the one time. I grabbed this level and then I did like an OTE range, right? And for fun, I just pull the wick, pull this measurement in some direction, right? And what I wanted to do was, so I'll just slide this all the way across. And what I was looking to do was, you see how this is like 100%, and then this one is 87, and then this one is 79, and then this one is so that's 79. This one's also 79. This one's like 70. Like there's no 62. The bodies are all at around, most of the bodies are around 50. And so I did that one time and it was just fun to do. Just to see that sometimes in these ranges there is an optimal trade. So how do I put it? It's not a and I don't use the word trade. There is a Fibonacci relationship between these high levels using the OTE ranges. That's 79, that's 70 or whatever. So like right now we're right back into 70. If I believe that this were the range, then I would probably in correctness, error, or in gambling, take the short at the 70 because it's below 87, it's below 100, right? And it's the in the OTE range entries, this is optimal trade. This is exactly where you would want to put a trade on it. The only thing that I could do is I would just have to go down to the lower time frame and look. We'll go down to the lower time frame and look and establish, are we respecting the down close candles or are we respecting the up close candles, right? What are we doing here at this? Because one area is philosophy, theory rather, and then the other area is exactly what price is doing right now. So if I'm putting on a trade, I could use philosophy and theory, or I could say, no matter whether or not I wanted to take a short, price is just going up, right? So that's that. But I just wanted to point that out because I knew that if I pulled out a fib that I was going to be able to see this type of relationship from the low of this candle, even through this entire consolidation, that it went 79. And even if we inverted this, it would be a similar relationship on this downside. The only difference between the two is what? We just tapped 87. The only difference would be fair value gaps or maybe like price action like this. The idea that we ran low and then pulled right back up, creating what could possibly consider the balanced price range. Us moving above this level, turning over, dropping into this down closed candle, and then moving out of this area out beyond 87. However, who knows if we're out of consolidation yet? Well, though the people who've traded this 300 times and they can see, yeah, clearly we're moving out of consolidation. I haven't traded it 300 times yet. I'm around the 100 and I'm around the well, I want to say I'm around the 90. This is around my 90th time I think I've traded this. Um, and probably of roughly 70% of that 90 times, I've tried to trade up and down through this range. And maybe once or twice I got lucky. But for the most part, excuse me, for the most part, there's just been so many contradictory signals and levels that that we, that I can't really ignore until after it's all said and done. And I said, oh, all I had to do was ignore all of the bearish signals, and I'd have been right in the range with the market. Yeah, okay, sure. We're above 87%, and we're still kind of churning here. The gravy of it could just be a trending day at this point, right? It could just be that. And we're going to keep our eyes open for that. I think what we're really kind of been shook with was um the crazy volatility of the opening range and the opening hour. It was just back and forth, up and down. Doot, 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 doot. Then once this level drops in here, and we'll see it on the 15-minute chart. This is what we are talking about. So we had a gap formed by these two down close candles. We traded into that gap with this candle. Then we came in with this candle and we took the liquidity out below prior low. So we took the prior low after the gap was formed. Once we did that, then we moved to the upside. How clear is that? It's as clear as back and forth price action. It looks like a barcode. That's how clear it is. And I guess this is what's referred to as taking the data lows, although there was no real news to create a candle like this. But we just ran right down below that flash of a candle. Once we got below that level, bam, entry, boom, to the upside. Yabba-ba-dap, yadap-ba-dap, Elmo's world. Yabba-dibby-dop, yabba-dibby-dop. It's there in consolidations or not consolidations, sorry. Trending days are very difficult for me to get on board. So I'm also still a little skittish with the idea of even trying to attempt to get on board today. Oh, I'm looking at the low of this down close candle in relationship to the high of the prior down close candle, right? Here on the 1 minute chart. I mean, we come within like a tick of it, and that's very good. If that's all we get, then it does seem that we'd be extremely bullish. Excuse me. Mm, 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 mm. It's a long way to go. It's a very, very long way to go. And I'm just considering not trading right now. Just letting prices go. Just let it go. That's my consideration. Yep. And I know that, you would think that getting into the market every day, I just want to get in and I just want to, trade. throw my money at it, but it's just not giving me the signal that I want to see, especially that fuzzy up and down 15-minute consolidation. I can't stand that one. But I've survived it today. That's something I'm very excited about and happy about. Because I was able to um, sit it out, wait it out, and talk about it. Still be sitting in front of the chart and not saying the thing went back and forth, and I went up 500 and went down 500 and took 1,000 and I gained 1,000. And so, yeah. And so it's just that mental capital is still have a bank of mental capital to deal with, to trade with, to pull from. And this sort of a trade idea that I've set up here was the idea that we were going to just drop back into that prior down close candle, maybe into its wick to achieve a move higher. Oh boy. Oh, hey, hey, hey. Hey, okay. That's very close to where I would have been triggered into, right? Very close. Oh, that would have been an immediate trigger in. Notice how I did not sell buy this? I haven't bought it. I have not bought it. Could be a mistake. However, um, now that we've broken out of this range, right? I'm looking for a consolidation, manipulation, and a distribution. Or is it consolidation, manipulation, distribution, right? Distri- distribution always reminds me of the word Mitsubishi. I don't know why. Maybe it's a similar rhythm. Mitsubishi distribution. Hovering near my pseudo entry, blowing past it to the downside. 115 left from a 5 minute candle. Yes, Virginia, I did buy that at the very high. Because what? Because you can't catch a top. That's the thing. You can't really catch the top. You- However, it stopped out at the very top going long. So it is what it is. There's nothing else I want to say. I don't want to say anything. I don't want to talk about it. I don't want to talk about it. We drop down into the wick of the down close candle. Return to where I just came from. 2 seconds. 1 second. Move. What is happening here on the 1 minute? Are we failing people? Are we going to the downside just because on this down close candle we rolled over, turned up and hit the mean threshold of the down close candle and then dropped down? I'm still watching the wick of this down close candle looking for an entry model here. Just for us to come down here, just trade into the wicks, turn over in this area, and then move back to the upside. I haven't seen what I wanted to see as far as a market structure shift. I see that we are trading above this prior 5 minute candle. Okay. 3 seconds, 2 seconds, 1 second. We are here. Um yeah, that's right. This could drop down and take me out of a trade where we traded all the way back up into this range, closed higher, dropped back down to the down closed candle. But again, I okay, slow down, buddy. Slow down, slow down, slow down, slow down, slow down. You just took like two or three trades. Take your glasses off and look at the chart. What are you doing? No, no. Some kind of way we just came up in this level. We had this 5 minute, we just closed on this 5 minute high. And it seems like we got these two down closed candles on the 5 minute chart that's just going to kind of pull back for a minute. As soon as we came out of this consolidation, yes, as soon as we broke out of this consolidation, we moved up, turned over, dropped right back in. On the 5 minute chart, what do we have? We have this imbalance from here to here. And then what are we doing? Are we dropping right back into the consequent encroachment of that? It seems like we are, but it also seems as if, there's this open range here. Did we consider this to be a balanced price range? Right? That was the thought that we had at first. But not trading down below consequent encroachment of this would probably be a sign of that. So do we think that we're going to continue higher from here, or we're going to drop down below this, retrade into it, and then move lower? Well, my trust in price action has been shaken just in the last 3 or 4 seconds. So I can't really say, right? So when I take a trade and I'm right, then it sort of validates my trust in price action. When I take a trade and I misposition my stop loss and I misread, then I can't say that I'm the one who's wrong. I have to say that the market is faulty and there's something weird is happening. Ah, hmm. 24 seconds. Whoa. 10:43. Thirty-one seconds left in the five. What's stopping me from putting in a short long right here? I keep thinking that we're gonna run this low. Yep, I keep thinking, oh yeah, no, we're gonna drop down and take this low out right here. New candle, drop right back in. Do that low. Oh, okay. Below that, are we going to continue? Small imbalance. Moved up, trade down, popped, pushed. Oof, pushed down hard. Oh, okay. All right. Okay. Okay. We today is just now. This is crazy. This is crazy. This is crazy. I'm gonna say that this is crazy. That through this entire range, this is exactly what I said that I did not want to be a part of. This is what I did not want to be a part of. And I'm trading one micro at a time because of it. And this is what's been happening recently in recent days, eras, times, and years is that price is just untrustworthy. It's just you sometimes you just cannot just sit back and say, "Oh yeah, yeah, yeah. We're gonna hit the down close candle and we're gonna move up," right? It's just like, "Oh yeah, we're gonna hit the down close candle, move up 10 times." And every time we create an imbalance, we're gonna trade above the gap and down below the gap at least 10 times, right? We're gonna touch the low of gaps, high of gaps, middle of gaps. How many times? Has it been 10 yet? Nope. Well, let's do it 10 more times. Now we're at consequent encroachment in the body of this up close candle. This white line represents the close of the prior 5 minute clock, 5 minute candle, right? So what does that mean for all of us? That means that if we can't violate it and move past it, then we are, let me hear you, audience. We're gonna watch price come back. We're gonna see price come back if we can't get past this and close higher and continue to move higher. We're just gonna see it turn right on of us, right on over on us, and come right back in. So we're gonna sit around and wait to be stopped out. We should. We should. We really should. We really should. So we're just gonna put it right protect, and it's gonna run right in and grab us because we couldn't get past that 5 minute high. Let's sit still. Let's sit still. It may seem weird. It may seem weird that I would start talking and not trade at this point. Seem weird, but I haven't seen anything except um a dirt bike trail. Loop de loops, forward and back, upside down, through the middle, around the barrel, and I haven't been attempting to short the highs today. So that's another thing that's been kind of keeping us in the game is that I haven't been trying to short the highs, and I haven't been trying to become emotionally attached to a particular outcome where I would stalk the entry with such intensity that everything becomes to a to a hammer, everything is a nail. And I don't want everything to be a nail. I want to be able to tell the difference between a nail and a screw, or a tack, or you know, or a bobby pin or something. So we had this high moved up. We came here the first time. I said, how do I know we're not going to just drop down below this, trade back up to it, and then move lower? Well, what did we just do here? We just came right back in and we took the low below this level. Something similar to what we did here, but we just dropped right back in and we've done this again on this time frame. We're in the low, the small imbalance here. We traded down into this gap on the 1 minute chart. Okay. Even lower in this range. I was saying, well, is that supposed to be like a balanced price range? We're not coming down here or what? Is that what we're thinking? But it turns out that no, we did. We did. We're here now. Let's see if we're going to continue lower at this point, just to have some sort of clear indication of a market structure shift. Now we're back in the premium of this gap above the consequent encroachment. You see how I put my face on my chin like Yeah, I just put my face in my chin. This is what we do when people lie to us on a regular basis, right? When people lie to us on a regular basis, we'll after we listen to them for a while, we'll do this. We'll say, "Oh, okay, uh-huh, mm-hmm." This is the same thing I'm doing with today's market. It went up and went down, and I just put my face in my chin, like, "Oh, okay, sure, mm-hmm, right." And then what happened? What? What? No. Mm-mm-mm. Are you serious? No. Oh, okay. Ah, man. And right now, the way it's at the consequent encroachment of this level, everything inside of me is saying, Grady, just buy that. Buy that and put your stop loss below that low, buddy. It's only a micro. But I don't look. I'm not looking to have 15 trades. I want to be in the with the trade. That's what I want. That looks good. Let's see what it looks like on the 1 minute. Hmm. This white line represents the low of this up close 5 minute candle. As we come into it, touch it, reject it, and we reject it is what we just did. I'm looking at how we rejected the closing price of this up close 5 minute candle. We dropped down to this gap and we are struggling with the low and the close of this up close 5 minute candle. At some point, price is gonna just begin to spool, right? It's gonna begin to function as we want to see. And I'm just trying to stay in sync with that development. Trying to stay in sync with the development. Even though we're in a very tight, high resistance situation where price is just running into headwinds and struggling to move forward in either direction. Mm, mm, which must mean that in some way we're in the equilibrium of the price range. Neither forward or back is very obvious even to the algorithm. It's all just about the same. 55 minus 55.2 plus 55 plus 1. Oh boy. Okay. Relative equal lows. Relative equal close. We moved above the prior up close candle with 25 seconds left on the 1 minute chart. 22 seconds left in the 5 minute. We're at the low of the prior 5 minute up close candle. And we rejected that coming into the last 10 seconds of that candle. 6 seconds. 5, 4, 3, 2, 1. We're at consequent encroachment. We open below consequent encroachment. This level represents the low of the 5 minute candle. We touched it, rejected, and pulled back. Let's see what we get next. What time is it? We're coming into 11 a.m. Okay, we may have seen the break in this consolidation right now. So either we're going to break here at 11, 11:30, 11, 12 o'clock, 1:30, 2 o'clock, 3 o'clock, 4 o'clock. We're going to break it. We're going to break the consolidation at one of those points. We're coming to the end of the hour. 4 minutes, 19 seconds left in the hour. This hour has been pretty much flat. There's a very narrow body range on the hour. Very narrow body range. It's mostly wick to the upside, mostly wick to the downside. It just came to this point and just kind of just sat on itself. No real movement. Mhm. operating around this consequent encroachment level. We're literally weaving above and below it, above and below it. This is the higher high. This is the lower low. We just broke to the downside here, right? So this low was below this low. This low did not take that high, although we've been using this level. Is that representative of the current direction and price? I'm not sure at all because we still have 3 minutes left in this hour. And does that mean that this hour would close bearishly or that this hour will close bullishly? We are looking, we are looking, we are looking. On the 5 minute chart, if we were using this as a 5 minute fair value gap, we don't have a close below consequent encroachment yet. We have price right on consequent encroachment. We've pushed the low of the gap though, with 2 minutes and 46 seconds left. I'm not gonna let that pull me into the trade yet, right? I'm not gonna let that pull me into the trade because price turns right over, pops up in the last 2 minutes and 30 seconds. Now we're back in the premium. We're back in the premium. We're back in the premium. Oh my God, we're back in the premium. We're back in the premium. There are 2 minutes left in the hour. Turn right back over and move back into the premium because what? As long as this opening price is violated within the next 2 minutes, it does. I mean, to me, it doesn't really matter if the wick drops down to here. If we come all the way back up here and close, right, and have a bullish close, there's an opportunity for the next candle to just drop a shallow wick into the discount and then move higher. It is what it is. 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 But you've been saying this ever since way up here, Grady, when you didn't get short up here. Shh. Stop what we're talking about. Okay, hold on a second. Oh man. I mean, the best part about it is no audio. No audio for most of my no audio for most of my trade. No audio. So I need to come back and do a voiceover for the rest of it. In the future, when you guys see this, this is much funnier than I thought it was. Oh, but what I was saying is I was saying that I needed to grade the wick of this candle to see whether or not we were going to be able to get any movement off of that wick. And I was like, I've never really done it before, but I was going to do it so that I could learn where the best opportunity to do something like that would be. And as soon as I got the 50% of this wick, sure, first. Oh, okay. I don't know. I don't know. Yeah, as soon as we did that, it was like tick tang tank, bam, all the way to the downside, just immediately, and then a retracement back into the range. And pull some of these levels out. There's that pre-market gap. There, this is pre-market gap as well. Let's see what we get here. Yeah, let's see what we get. I don't know what to expect. I wanted to consider this to be a market structure shift, except for that long wick to the downside. Then the low of this candle, that'd be great if we were traded, if it were traded to. But we just traded back up into that range just a little bit, hitting the low of the prior up close wick. Oh man. You know, and I've been sitting here looking at this OBS all of this time, and I hadn't noticed that I had muted it so I could go do some stuff and never unmuted it. It's been like 40 minutes, an hour of silence. Well, that's fine. It's been a day. It has been a day. It has been a day. What am I looking for here? Let's tune in. Let's tune in. Let's tune in here. After we left the low of this wick, we delivered rapidly, right? Popped right, we snapped up from a level, traded down below, closed. Okay. So only reference points that I have now are these lower time frame up close wicks, up close candles. That's the only reference that I have for any type of a entry or whatever at this point. So that's what I'm using. Kind of drawing out a box around the highest up close candle here. Pull that forward, right? So I did it slowly. And then the only thing that we saw is that this from the close of this up close candle, we just immediately fell. And the time is 11:27. Right. Guys, be careful where you're trading. All right, take full responsibility for your own trading behavior, actions, and decisions. This is not a signal channel. This is trading entertainment for everyone's personal enjoyment. But Grady, we'd like to see you make a lot of money. Okay, all right. You want to see me make a bunch of money? Let's do it. All right, let's do it. Let's make a bunch of money here. This is what we're gonna do. It's 1 minute 31 seconds left in this 5 minute candle. We just dropped all the way down here to this pre-market gap, which that started everything. Traded off of this 5 minute gap pre-market. We ran up above, turned over, pushed, bam, broke down, slid right back in. Now we're here again. Mm-hmm. Now we're here again. Now the candle that I'm looking at on the daily chart looks exactly like what I expected to see a candle look like. Remember when we started the day, I said, "Man, today's candle is just this full body." And it looked unusual. There was no wick. Now it is roughly 50% wick, 50% body. And that was exactly what that's the type of candle that I would expect to see on a daily chart, not just this body that's just this full big blue line. Let's go. Let's go. So, okay, let's entertain the people here, right? Either we're gonna entertain them with um it's 5 seconds left in the 15-minute candle. 15 minute 5 seconds. So either we're gonna entertain these people with some good trading, or we're going to not. We're not going to do it. Small imbalance, closed candle. What are you gonna give us? 15-minute candle just opened. Just looking for just a little bit of a push up into anything retracement to the high before we move down. If we're that heavy, then not something is wrong, but that's just a very clear sign that we're extremely heavy for today. One of my worst days of trade, and I'm not, I'm very, and I'm very honest about this. One of my worst days to trade is when the market is gaps. And the market gaps wildly. All of the levels that I was looking at the day before and that I had been studying, it's almost as if, I kind of just blow those things out of the water. And I was like, oh, yeah, yeah. So, you go into the close of the day. Yeah, I got some levels marked out and I see what kind of where the market is going. We could be here, or there, right? And then you wake up the next day or the market opens at 6 o'clock and it's moved, 500 points to a completely different position. And now you're looking at this chart like, man, man. But don't let that discourage you from charting, right? Don't let that discourage you from charting. You're not going to have the same experience that I have. To me, it's just jarring. It's just one of those things that as I look at it, I say, what am I looking at? Like, why is this brand new to me right now? This is trying to lull me into taking a short right at the low of this gap here. I don't like that because there's also this gap that's still open right here. And if this gap is open and that gap is still open, why would all of the gaps remain completely open? Great. The market is heavy and we're falling and yeah, good. Yeah, come on back and just pick up where we left off and get all of this stuff. And the market says, no, I'm heavy. I don't want to. Oh. How many shorts did you guys take at the top? Right? How many shorts have people taken trying to get into this and been stopped out over and over and over? You know that I've taken plenty of shorts in this range trying to get on board with this. And this has been typical of my experience with seeing, oh, higher time frame levels, where's the high, and trying to get short. But what was my advice if you wanted to be short up here? Take when the market moves up, get short and put your stop loss up here off the screen. But that's not something that I could do. And then after everything has been transpired and we've moved back and forth, then I'm saying, whoa, I missed this move. I didn't. I didn't. I did not. What I was not able to do was weather the wicks of these types of days. And if I take a look at the 15-minute chart, just wicks back and forth, wicks up, wicks down, wicks up, wicks down, wicks all around. Do I have the patience to let the higher time frame price action play out? I don't move all the way up, drop down, wake up into this um small gap right here from the pre-market. I'm looking at a 15-minute chart. It's a pre-market gap right here. Just looking at where this wick is traded to here, right here. We touched that, then slid back up into this up close candle. So drop down to the 15-second chart. Hmm. It's one of those things you try every day. You try this every day. You try every day. And I'm not taking a huge loss today. I'm taking a paper cut and it's not even a thing. But it's just you try every day to just get this thing under control. And I think that's just one of the lovely facets, one of the lovelier facets of this thing. And it makes you appreciate the easy days. The easy days of, those are the things that you really, really appreciate. Just really appreciate. Just that moment when you finally say to yourself, "Oh," like in this particular range, when you say to yourself, "Oh, let me measure this from here to here," and then you see it hit that 50% level, and you're in it, right? And it just delivers. Ah, baby, thank you. And there's also those days where you get long. You get long at the down at the below that down close candle, and it goes up to that 50% level, and then it rips your face off. And you're sitting there saying, why did this thing move against me so aggressively? Take it personally, don't you? Yeah, take it personal. Just watching this up close candle. We traded to the up close candle. We kind of respected that wick. We closed above, then we turned over and dropped right back down in. This is a higher close. This is a higher close than the prior close. This low is here. This close is here. So maybe we're looking at a short-term reversal coming in. Maybe a short-term reversal coming in. It just depends on where we go with this candle. Go up above, keep going a little bit. Oh, back in 15-second down close candle. Pushed into a lower time frame down close candle, the 15-second. Traded off of the current down close candle. We popped up just a little bit. We're up above the consequent encroachment of that level. Turned back over into that level, dropped down just a second. But we're at the low of that 5-second high of that candle. We're up above this little space as well. So just looking for us to either move above this level or move below that level. Mm-hmm. Price is flattening out here. 2 minutes, 15 seconds left in the five. Okay, so now we've lined up against the low of that up close candle on the 5-second chart, in line with the high of this candle on the 15-second chart. Just pushed above it just a little bit with a slight close. We're still below the sub close candle. Wick to the low of that little gap that we were involved with. Press high, press low. So we had this low, we had this lower low, we have this higher low. Now we're kind of pulling out of this sort of a range. It doesn't seem ideal. It's 11:38. It just seems like a quick little place to kind of move in a different direction. We have 1, 2, 3, 4, 5 15-second candles, two consecutive up close candles, moving to up 7, 6, 5, 4, 3, 2, 1. There's nothing that looks like a lower time frame fair value gap, perhaps except for this. That is this little gap here we traded into. We see that there on the 5-second chart. Now we move back into that range. Now we're looking at these two up close candles with these long wicks at the bottom, right? So what do they represent on the 5-minute chart? With 40 seconds left, it just represents just a speed bump at this point. We could just move just slightly above the high of the prior up close candle and reject, but we have 30 seconds to do that with. Come on, come on, Nick. That's 11:25. Nope, 7:30. Okay, just marking out, just marking some stuff out. Okay, I know what I need to do. Just need to reverse. It's a little bit too late to do this, but now we were able to kind of get it done. Now we can see just a little bit clearer. Dropped in, bump, bump, popped up, pooped out. What I'm talking about. 5-minute candle just opened, and now we are just above the prior two up close candles at the low of this range. Mm-hmm. Hmm. This doesn't apply. We drop down into the bite of this candle. This low come all the way into this 1 hour close. We have marked out here. We touch the low hour close of that candle and then reject and move back up into the range. It's the possibility that down close candle can keep us from descending at this point. Okay, so this candle, as we open, we drop down to the down close candle. We moved higher. Hmm. Small imbalance right below the low of this up close candle in the 15-second chart. That's where we are. Here's the low of the prior up close candle on the 1-minute chart. We just traded into that range and just touched this level just slightly. So a little bit of rejection at that point. This next candle did not make it as high as the prior up close candle. So we're just watching to see whether or not that's going to turn us over. 3 minutes left in the 5. Possibility we could get turned over at this point. Now on the 15-second chart, we just wanted to see whether or not we close below this prior down close candle. If so we do so, do we do it in a way that's just a clear indication that we could get involved if we wanted to get short at this point, right? Because we're already in a long, higher time frame movement to the downside. Is that going to continue, right? Or are we just going to be kind of thrown back and forth in this range? All right, so I'm gonna pick my hand up to talk about being thrown back and forth, and we just traded right back up to the constant encroachment of this pre-market gap. We tapped it and then we moved down. But the down close candle's in the high of the prior down close range on the 1 minute. So we have this 1, 2, 1, and then this candle. So that could very well represent just a short-term order, bullish order block that could send price just a little bit higher. We break out of that range and downside after we touch the 50% consequent encroachment of that gap. And then what does that mean? Well, that means on the 5-minute chart that we're down below this 5-minute candle. So the 5-minute candle opened here, and we retraced to that opening of that 5-minute candle there. Are we going to pop right back up and hit this level again? If we use this, and I just hated to move that gap, I just wanted to identify where consequent encroachment, sorry, the mean threshold of this up close candle on the 5-minute is we're now just going below the mean threshold of this up close candle. Um, am I using that properly? No, because I'm above it, right? Now that we've gone down below it, I wouldn't look to see either the high, the open, or that level keep us in check. Okay, so price is moving very fluidly now, right? So every time we see us come to a level, there's not a lot of hesitation or deliberation at where price is going to. It's getting there very rapidly, and then it's moving on, right? So I don't see any sort of like gap here. When I mean gap, I mean this, right? Like if I bring this here and then I bring this here, I would say, oh, look, we trade up into that gap and we stayed below consequent encroachment. Then we move lower and close at the low or below this prior down close candle. Then to me, that's like, oh, that's a gap, right? Now, keeping everything in alignment, here is the opening price of that 5 minute up close candle. We tapped that here, and now we've moved away from it. So I'm not really looking for anything except up close candles. I need a candle to be moving up before I could even make an entry. And everything that I'm getting is very short-lived down close candles and then down close wicks, right? Wicks of these down close candles, and then we're moving to the downside immediately. But I can't really do anything with that. I'm looking for this particular candle that's running up in the opposite direction, like this one, and it's giving me what? It's giving us what? What is it giving us? It's giving us a lot of range. Is that all it's going to give us? That's the question I have. And so I clicked the sell button, but nothing happened. All right. Um, click the sell button, but nothing happened. And that's terrible because it didn't let me in. And I think I just need to buy a new mouse. I think I was doing, been abusing this mouse a little bit too much. And so instead of me getting a clean click up close, up, that's a second push to the upside. I'm over here looking at the 5 second chart to see if we violate that high. And we don't. But again, I just put more money at risk than I normally would. That's ill-advised. We traded to this gap. This red line is the low of that 5 minute candle. We just dropped down below this and popped up and here touched that, and then we dropped down to the downside. On the 1 minute chart, it looks like we're doing this. It's just a small imbalance right here. We traded up into that imbalance, and then we turned over and dropped down. But without continuation, we already know what we could expect, right? Without us closing below this down close candle, then we could just expect that from something on the lower time frame, we would drop into a down close candle down here, and then it would reject price and send us back to the upside, like sunny side eggs. Makes no sense. Sunny side eggs. Um, now earlier when the mic was off, I was screaming about putting on minis, right? Like, oh, I'm gonna put some minis on and entertain y'all, with X, Y, and Z. And then I was like, no, that's today's stream is sponsored by. Hi, today's stream is sponsored by Financial Responsibility. If you don't have any, get some. What do y'all think? Move the break even? No, I'm still gonna let this risk run. Still gonna let this risk run. Hi, I'm Grady on the trades. Today's trades are brought to you by Fiscal Responsibility. If you don't have any, try to get you some. Do y'all like that? Hold on, let me try it again. Excuse me. Hi, I'm Grady on the charts. Today's trading is brought to you by Fiscal Responsibility. If you don't have any, go out and get you some. Whew, wow. Today's trading is brought to you by Financial Responsibility. If you don't have any, dang. Hi, I'm Grady on the charts. Hi, I'm Grady on the charts. Hi, I'm Grady on the charts. Y'all like that? Hold on a second. Let's try it again. Hi, I'm Grady on the charts. Today's trades. I probably should have put the trade in the background here, right? I don't think I even had that set up like that. Hi, I'm Grady on the charts. Today's trades are brought to you by Fiscal Responsibility. If you don't have any, go out and get you some. I'm working on that. I'm working on it. Trading? No. Fiscal responsibility. Oh my goodness. This particular trade, I think, has brought us within $100. We're just mitigating our loss today. It seems like we were down like 240, and so we're like halfway to break even. Just gonna move the stop loss down to here. That doesn't even make a difference, really, does it? Do you think we're gonna run to 50% of that new day opening gap from this point? You remember the new day opening gap? If you remember the new day opening gap, put your hand up. The opening gap is the difference between yesterday's close and today's open. But from today's open, we ran to the upside. Do we think that we're gonna pop right back into that gap and give it some sort of acknowledgement? Hmm? Is that possible? 9 minutes and 51 seconds left in the hour. This always makes me feel like this, right? Sometimes the best trade is that last move, right? The last move before the trade ends, right? Before we change direction. Sometimes that's where we all get involved. I know you've been there, right? But there is a gap between the close on yesterday and the opening price today that extends from 18,643.75 at its high to 18,385.75. Excuse me. And I was really interested to see whether or not we could get into that gap today. Maybe today, maybe tomorrow. But yeah, we just traded right below the high of the London session. Right below the high of London session. London session is where? Where is London session? Here. So maybe like this 1 hour close, we could pull this to the other side, and these two levels are in alignment, right? This is the high of London session. We've dropped down below. We're just about a little bit below 50%. We closed just a little bit below 50% of the we closed into premium low, just a little bit, and then we turned over and popped up. So as you've seen plenty of days, sometimes my trades just come right back against me. So we'll get involved, it'll move a certain distance away, and then it'll turn right over, and then before we notice, we'll look right up and it'll be right back to where we were. But I'm still wondering, are we gonna go and approach that gap at all? Maybe 25% retracement into that opening range gap at 18,600 maybe. Maybe 18,600 just to get to the opening range gap. It'll be lovely to move below this. Again, my trading days are probably too long. I noticed that a lot of other traders, except for maybe, a few, they only trade for maybe an hour, hour and a half. They take one or two trades, they look at the market, evaluate it, and then they exit. And I think that's what I should do, but it's um normally I'm trading into this time of day. I think when ICT first started explaining to us the silver bullet, he often told us that by 11 a.m. we should be done trading. On days like today, 2 p.m. or the PM silver bullet, the 2 o'clock silver bullet is probably the one that everybody should be getting involved with. If you just sat here and watch, if you did not, nobody sat here and watched me trade. Let's be honest. Let's be honest. Let's be honest. In the future, when you come back and you view this trade, you're gonna say to view this channel. If you got this far into my trading channel, you'd say to yourself, "Hey, look, nobody's on this stream." But that's one thing that I really admire about a lot of streamers who have that first 100, 500, 300 viewers on like the other platforms or whatever. When they show up every day and they do their thing. The difference between them and the rest of us is that they're clocking in the work. They're clocking in. You don't work, you don't get paid. That's just how that goes. Yesterday was a break-even day, and I do not want to see today as a break-even day. And I told that joke, like I said, when the mic was silenced. I told the joke of trading a mini at this point. Like, well, I'm gonna throw in a mini and see, what I got going on here. And as soon as I get involved with this mini, as soon as I get involved here at this trade, I don't think I had much drawdown on this. I think this was pretty straightforward, and then it just started to deliver, and that would have made all my dreams come true. Doo ba blue ba blue ba blue, blues a boo ba blue to blue. Yep, that's how you sing a song similar to a song and not get sued because you're singing a song. Oh, like this. I woke up this morning with just a center back pain. Center back pain. Break even. Just break even on a day full of irresponsible entries and not break even really. I mean, because I'm not really putting on that much risk. But a day full of a lot of irresponsible entries and um poor stop management. Like having my stop loss just like in the right spot or in the wrong spot. On the lower time frame, let's see on the 15-second chart, there's this imbalance here on the 15-second chart. We moved up above the prior up close candles here. Then we dropped down, took the low out, then we popped up above. On the 1 minute, we just dropped down through all of this sort of stuff. We came down below these up close candles. On the higher time frame, we're just running up inside of this imbalance here on this time frame. And I have my stop loss practically break even, but this is a straight line pointing. This is a straight line pointing directly at my stop loss. And everybody is saying, "Get out the way! Get out the way! Get out the way! It's coming! It's coming! Move!" And I'm saying to myself, "Look, I can't move my stop loss. I mean, it's not, I can't. It's going to be basically a flat trade. Yes, it doesn't, could have taken off a lot at the bottom and really just got out of this thing and try to adjust my situation. The hour is coming to the close in the next 3 minutes and 50 something seconds. Everything below this particular level looks like it's going to be wick. Right? Looks like everything below this run up is going to be wick. But you know what? We could also just drop down and close real heavy below the prior hourly candle to the left. But, right? Is hope a strategy, right? Is hope a strategy? No, hope is not a strategy. That's why my stop loss is right here. And I'm just letting price do what it does. On any normal day, on any normal day, man, we traded up into this and then we delivered to the downside. On any normal day, we would not have as much overlap as we would have here today. We've had a lot of overlap in the morning, and now, even later toward this time of day, we're having a lot of retracement that would normally on a trending day we would not have to endure. But it's fine. But it's fine. It is what it is. And the problem is I have to endure this because I'm trading such low risk. So if you would think of as this sort of these pullbacks with low risk as theta, right, with options, then this is what you have to endure when you trade such low risk. When you trade low risk, you have to either be at the high end of an extended move and get out at its low. You can't really endure the middles because you're not really making a lot of money, right? So what I mean by not making a lot of money is like if I had traded this with a mini, I'm done for the day. From here to here is $1,000 and I'm out. 980 something bucks. If I were reducing $200 drawdown, it would be that amount minus the two whatever amount minus 200. 1,200 minus 200 because we sat here and we moved 80 points, 80, 90 points, right? So that's that. More leverage or more risk, then the shorter the trade needs to be. But at the same time, if it goes against you, then you're down that much, right? So if this were that amount in profit, it's that amount in loss. You just have to live with that reality. So I sit through these pullbacks that come all the way back to my entry. I look at a 5 minute candle that's dropped down from this far, and then I say, okay, well, tighten it. I tighten my stop loss up just a little bit, give it just a little bit of breathing room. Before it goes down, it'll probably flash to the upside, uh, deeper into these wicks, and then move to the downside. All right. But again, like I said, that is just the nature of the beast. That is what we deal with. If you trade with lower risk, then you're sitting in trades longer and you're letting them play out further, and you'll probably be stopped out more often than not. Either that or you're going to take 15 trades and you're going to scalp for $50 a trade, right? And then it's the same thing. $20 up, $20 down, $20 up, $20 down, $20 up. And so you're in and out, in and out. Or you take that one trade and you just let it run. You don't do anything to it. You don't mess with it. You just let it do what it's supposed to do. This is a second consecutive, this is a third 5 minute candle in this push. And if we could consider this up close candle to be um bearish order block, I'm not saying that we can. I'm saying if we could, then how would we want to treat this trading range? Right? So we came very close to our stop. Price turns over and starts, treating us nice. We like that. This price continued to the downside. Not quite. Not quite. It just pops right back up. A third up close candle stops us out, right? So that's not really what we want to see. We want to see price action that's going to respect the wick of this up close candle, respect the closing price of this up close candle. That's what we're looking for. That's what we're looking for here. Now, for your trading entertainment, this is what I'm going to do for your trading entertainment. Probably shouldn't do this because it's so far down in the range. I'm not going to then. If we had put another push to this, to the close of this up close candle, I was thinking of hitting that sell button one more time. But what that would do is it would have brought it would bring my average down, right? My cost basis down toward the active price. And then any fluctuation there puts me in drawdown, right? Nah, 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 nah. 3 minutes and 20 seconds. We're still low toward the bottom of this up close candle. It's not enough for me to kick my feet up and enjoy the rest of my day yet. But we did mitigate our drawdown just a little bit by seeing price come down into this level. Well, great. If you would have got wild and slammed on another contract there, buddy, you'd been good. Thank you. Thank you. Thank you. Thank you. Mm. But again, like I said, if this was if this were my first trade of the day and I were up, then yes, I would add. Because in that current trading session, I'm 100%, right? I'm green, I have protective stop loss. Yes, I could add. In a situation like this where I am very close to mitigating a large drawdown, the moment of drawdown, which was at 2 grand from last Tuesday, last Wednesday, or whatever it was. This has become an obsession with um fighting to get back to that particular level. There's a 15-minute imbalance sitting out here between 19,500 and 18,950. It's just it's just a large 15-minute imbalance just sitting out there. Has anybody noticed it? Pull this down to the top. I don't like that. We could leave it open. That's fine if we leave it open. But I would really like to move down past the lows of this previous down below these lows right now if we're gonna leave it open. It would just be nice for us to get down below these lows. But we aren't, are we? Have we noticed that we dropped down into this level? No. Every everybody's me. I'm the only one here. Everybody pull that arrow from that low across, and we're going to just take a quick look to see what did we just do? What did we just do? Well, see this sort of a gap inversion of sorts. We created it. We did not trade into it. We moved above it, dropped back down into it, touched it here, bam, and then ran right back up. 5 minute candles. The last 10 seconds of a 5 minute candle is going to tell us what we need to know. If this 5 minute candle just gets down and goes down here, then the last 10 seconds told us this is a bearish candle, guys. Don't worry about it. It's bearish. We are struggling in the last 30 seconds to even get down below this previous red line, which was a close on a particular level. Now we're back up here. So are we thinking of bailing? Are we thinking of bailing out, getting out, jumping out, running for the hills? Not this particular time. Not this particular time. This particular time, again, and I've done this multiple times, even live here on stream, where I say, no, buddy, I'm just going to hold to see what happens. And what happens? 90% of the time, I get stopped out. Is that because I don't know what I'm doing? Yeah, that's exactly why. That's exactly why. So now we've run up above the previous high of this candle, and I'm happy with that. Right? Why? Because that's what we're looking for, right? We're looking for price to address the high of the prior up close candle in the range. Then we turn over and we slide down just a little bit. I want to see us slide down a lot. I want to see us wipe out this wick and just keep on going. And everybody's like, yeah, but look, that's just a long wick. We dropped down there and rejected that level and pop right back up. I see that. I see that. I see that. I see that. But that's what we did with all these wicks too. And then we ended up down here, right? So we did that here and we ended up down here. Now, I just want some more of that love, right? Some more of that flat top love, right? Just trade off and then just drop. Now, we did not get it on the first trade. And we're just kind of talking ourselves through waiting for price action to just complete itself. There's a 5 minute candle. We're at 350 and jumping out of this trade after the deliberation all morning. Uh, and not riding it out would just be heartbreaking to me. That'd be heartbreaking. My high is at the high of that up close candle. It's not at the high of the down close candle. Right now, it's still presenting to us as if we're going to see lower prices. It's still saying, well, we could, we could, and it's still dipping and dipping and dipping, right? As it came back in toward our stop loss, our first instinct was it's coming to take us out. Let's lock in the profit, right? It's not a bad instinct. It's not a bad instinct, except we need to see stuff like this on this time frame where we just traded up into the lower of this up close candle. We touched that level and we rolled over and dropped down. We again did not add to this trade here at this point. We can't. We can. It is just a rule that when you're in drawdown, adding in heavy to get out of drawdown is a no-no. Everybody hears it, but we don't understand the ramifications uh, of rebuilding your position financially. You're rebuilding your position financially. And I think this is a great analogy. And you save up all of this money, and then you just go out and you buy what's something that you just go out and just buy anything, right? And so you're saying, well, oh, I know exactly the amount of money that I would need in order to to have my rent, right? To have my rent. $1,500, right? I need $1,500 to have my rent. Um, when you get to 1498, okay? $1,498. What sense would it make for you to spend $98 3 days before rent is due? What sense? Well, what would what would be the thought process there, right? You already you bought yourself all the way back from the brink. You're almost there. You're almost at the finish line. And then when you get to the finish line, you say, I bet you I could run out here real quick and go out party with my friends tonight. Which is easier to borrow if you needed to borrow? $2 or $100, right? If you call somebody on the phone and say, hey, friend, let me borrow $2. They'll be like, for what? Right? Because they're gonna say, well, for what? Then you'd say, I'm $2 short on my rent. They might say, oh, that's it? You're just gonna call me for a lot of money. And you'll tell them I was gonna blow this last $100 yesterday chilling. What I decided to do was hold on to this 98. And matter of fact, you could ask them for $5. Ask them for $5, right? Hey, I need $5, right? What does that mean? That means after you pay your rent, you still have $3. And then when it comes down to paying them back, you don't have to pay back your friend $100. You slide your friend $5. Come on now. This is what I'm talking about. And so when we're in the market and we are in drawdown, we are not trying to take our rent money to the casino. What we're doing is we're letting price develop, move into its position. We need to figure out where we are. We have a new 5 minute candle, but we did not close below the prior 5 minute down close candle. I don't like that. I don't like it. I don't like that. I don't like it. Why? Because sometimes that next candle is an up close candle to, you know, off the edge of the screen. I'm gonna move down to here because we just retested the high of this 5 minute candle right there. We moved up, we hit it once, we hit it twice. Why would we come back here a third time? Now on the 5 minute level, this is the zone that I'm looking at to say, I want to see rejection. This white line. This white line, I want to see rejection because on all the other, every other scenario, we've already traded. We traded well, way up there. I'm trying to figure out why my white line looks gray. Ah, and if we come all the way back to the high of this level after doing all of this, I really believe we're changing directions here. I think we're going to go up for a period of time because we traded the wick, we traded the close. The only other thing that we haven't marked out would be the mean threshold, right? So that would be the mean threshold, quarter level, right? That would be the mean threshold. Then from here, we want to see delivery to the downside so we could hold our position. And why am I more, sorry. Why am I'm more comfortable holding this position like this today than normal because of all of the consolidation we saw early in the day. Because of the strong move up, that extended consolidation that was we were sitting in for a while. And then I said to myself, oh yeah, well, hey, this 5 minute candle is early. We're early in this 5 minute candle, and we're still not showing Grady what he wants to see, which is he wants to see the down close candles begin to close. Look, this down close candle, I don't want to see that. I want this trade to deliver lower. And I'm gonna slam my fist. Bam, bam, bam. Bam, bam, bam. Go down. You need to practice that. Obviously that's the way to get the market to move now. You need to practice that. Obviously that's it. I didn't realize that that's what it was. I didn't realize it was bam, bam, bam. Okay. All right. This is reasonable price action. Very reasonable. What I want to see is a 5 minute fair value gap, though. I want to see a 5 minute extension in price that just falls. And I don't want to see price just say, oh, yeah, you wanted to see us close below that level. We did, but not on the 5 minute chart. All right. I'm Grady on the charts, and I'm here with a word from our sponsor, financial responsibility. If you don't have fiscal and financial responsibility, Go out today and get you some. Thank you. Now back to trading. So it seems the price decided that it did not want to really run away from this level. And I'm just acknowledging that that's what it is. A lower up close candle in this range is not really good for us. Excuse me, on the 5 minute chart because we have these this low and this open. Close higher, close higher. Close higher than this close. This close way down here is higher than this close. And this is a very good place for us to look at the lower time frame price action and say, hey, lower time price action, or for short, LTFPA, that's lower, lower, lower time frame price action. Where are you going? Like, where are you going? Like, what would be the need for us to come back into this area? Are you trading into the lows of the up close candles on the 1 minute chart? They're not lonely. There are plenty of candles there. They're okay. Okay. Or we could say, hey, lower time frame price action. Are you just inverting inside of this gap here, like here on the 1 minute? If you just wanted to trade back up to that and then just get down below that. If that's all you wanted to do, we really approve. We approve of that. Go ahead. Go ahead and just go ahead, go get down. Just go ahead and get down. Wait, bam, bam, bam. Bam, bam, bam. Go down. I don't think I had the voice right. 5 minute candle closed and opened beautifully. Closed and opened beautifully. And this is one micro. This is one micro. And I think that is just the funny part about this is that I could have leveraged up, right? And of course, in trades where I've not immediately stopped out over and over because of strange price action, it seems like leveraging up would be the thing to do. But look at your average, right? Look at your average. How many trades are profitable and how many aren't? Of all of those trades that I've taken this morning, this one trade alone is bringing us back into, not profitability. That's not the word that we want to say. Because I think profitability is like a living wage in trading. Profitability, in my personal opinion, is a wage that you could like live on. Um, Prior to that, you are basically break even, which means that all of the money that you make from trading is completely spent. It's the definition of paycheck to paycheck in a way. Um, and I don't mean that in a negative way or in a way that is accusatory. Man, I just wish this price would just fall at this point. I guess we already got that fall. And this is this is exactly what I was saying earlier, is that when we get into moves like this, I really struggle to get involved here because you see this expanded range here? All of that happens in the upper 50 percentile of a move down. And it just happens, and then everything else just bounces around and bounces around and bounces around. And then you say to yourself, I wonder if my stop loss is too tight after that. After we move from this pop up here and we drop, there's no real question of whether or not the stop loss is too tight or too close or whatever. There's no real question about that because prices move so far away from it already that you're fine with it. Like, oh, okay, wow, this thing comes back against me 50%. I'm in the money and good to go. And for us here, we're watching and waiting for price to leave what? These two up close candles. And that's it. That's what we're waiting for. That's what we're looking for. Price to leave these two up close candles. We're down below the lows of it. We have not had a close below it. We've had wicks below it. Excuse me. And so now this is the area that we want to see on the 5 minute chart. We want to see us close below this level, maybe an addressment to the low of this up close candle in five, and then an extension to the next level where we would produce our next retracement, the next grouping of up close candles. 1 minute, 28 seconds. We are moving away from these down close candles. Okay, this is 229. Oh boy. And I say that because what? Because I'm looking at my drawdown, and that's just like, hey, a $20 loss on the day, and that just brings us into break even. So if I were to move my stop loss, if price goes ahead and moves aggressively at this point to the downside, I know the first place that I would move my stop loss so that I could just go take a nap if I wanted to, right? If I wanted to, I could go just take a nap because if price came back and stopped us out right here, then I would say flat day, no loss, no win. It's just the day that took off. I won't be here tomorrow. I have an engagement, a meeting that I need to attend. Wow. And so I won't be Grady on the charts tomorrow. I'll be Grady somewhere else. I'm looking for London session low to be next. Let's go London session low. That would be a nice place to get to. Still looking for us to make an entry or an approach to the Zabe Zubi Zubi Za Zaba Zaba Zuba Jubi Juba Juba Ja Juba Juba Juba. How many? Do not jump in and jump out of trades. That's one thing I want to say. If your accuracy is not what you think it is, and you say, "Oh yeah, look where I am right now. Everything's really, really grand." Don't jump in and jump out of trades. It doesn't help us. It doesn't help you at all. It does not help you. If you're in a trade, stay in that trade. Do not jump in and jump out. If your accuracy is not 300%, and every time you go in, you make three times the amount of money that you thought you were going to make, don't jump in and jump out of trade. Stay where you are. It's fine. It's fine. Just let it go. If we began to spool from the highs early on in the day, we consolidated, we've done all of these types of things, and we finally made our way downtown walking fast and we're homebound, then chill. Then chill. Then chill. Now, this is when we go ahead and allow FOMO to take root. Right? We can allow FOMO to take root because we're saying to ourselves, had I entered with three contracts, I'd be up almost $700 now, right? But we'll have time for that next week, right? Once we move back above 100,000 on our compound account, then we're going to address the idea of increasing our um everybody who knows words, increasing our contract size. We'll begin to increase our contract size once we move back above 100,000. And until then, we're going to continue to take the baby steps in order to move forward. We're going to take these baby steps and move forward. My thought now is what if I just go ahead and lock in some profit right now? Just lock the profit in and jump out and then jump back in. Well, what if we trade back into that new day opening gap, right? Maybe we don't stay there, but we trade down into that new day opening gap, right? What if we did that? How much would we risk, right? Because we altered our entry price. How much would we risk altering our entry price because we decided to jump out and then come back in later? How much would we risk? Well, the truth is that we don't really know. But we do know is that we're moved down into the intermission of the discount of London session. So we're in London session discount, and there's a down close candle here. What do we expect to see here? We expect price to move against us. Do we expect to push past this down close candle as if it isn't even there on the hourly chart? There's 36 minutes left here. We have quite a bit of space here on the chart. Here, I was expecting to see much more movement down before any type of retracement back to the up close candle, right? I was expecting much more movement down, just maybe another candle or two. I expected this candle to be a little bit longer. Then we could have put in an up close candle to hit the lows of this candle, the wick of this down close candle, right? Or because these two candles are conjoined, you know, the low, the wick, right? Right? Right. So 229 or 240, 251, we're really at our break-even price. We could go ahead and jump out here flat, come back later on, or jump out or and trade after stream. Yeah, we're coming up on 3 hours on the stream. So this is what we're gonna do. Because we're gonna end the stream here, I'm gonna end the trade here. Mm, does that make sense? Nah, let's go for the money. We're going to keep the trade on, but we're going to go ahead and end the stream here. We're going to see if we can ride this market all the way to the downside. The only other thing that we could do if we jump to break even is do something reckless. We just might just go ahead and say, let's not do that, right? We took a look at the 1 minute chart. We have this imbalance right here. We just popped up. Go ahead and see what we do here. We could go down below this and do all types of other things and trade up to here later. But let's not jump out of a trade that we're in and we're holding tight to. Just see how it progresses, right? Thus, today's stream is brought to you by financial and fiscal responsibility. I am Grady on the charts. Guys, if you don't have financial or fiscal responsibility, today's a great day to go out and get you some. Okay, so remember, guys, this is just trading entertainment. I'm not necessarily a trading coach, and I say that and it does sound a little confusing, but I'm not. Um, Trading is risky, y'all. Trade at your own risk. Study. I trade ICT. That's the Inner Circle Trader. Um, I trade his concepts, whatever you would call those concepts. And so you might see similarities between my trading and the trading of other people. If you decide to get involved with this, it can be incredibly lucrative and incredibly risky. So it is what it is. Um, thank you guys for um providing me this space to trade with you, so you could see some of the struggles of newer traders, some of the struggles of traders who are just breaking even, just getting past some of those hurdles. I need to figure out how to adjust this white balance on this screen because it just keeps going higher and lower, and I don't know exactly what to do with that. This is weird. And I thought it had something to do with the sun breaking through the clouds, but that's neither here nor there, and has nothing to do with what we're doing right now. So, market is still moving in our favor. That's very, very good. So, let's clear our thoughts and let's focus on leaving this trade, leaving this live stream. Um, Still trying to manage the trade and talk. Yeah, thank you guys. I'm not gonna be here tomorrow. I'll probably pop back on, probably pop back, probably pop back on Friday. We have news Friday. Friday's news is nothing. We don't have any news on Friday the 25th. Tomorrow we have durable goods and existing home sales. So that's all. That's fine. It's really, really nice. Really, really neat. Okay. Thank you guys. If you guys don't have fiscal and financial responsibility, go out there and get you some. All right. Restarted the stream so that I can do this.